My last two purchases in the open market were at 33 cents and 35 cents. And the last I checked, the stock was at 31 cents. So you can buy at 10% below where I last added to my position.
Hi, I'm Veronika van Wollen, and joining us today is Rahul Paul. Rahul is the president at Radisson Mining Resources, listed on the Toronto Stock Exchange on the Venture under the ticker symbol RDS. Radisson is also listed on the OTC. Rahul, how are you? Thanks for joining us.
I'm good. Thanks for having me.
Likewise. We're excited to dive into this story. I know that you have a lot to talk about with Radisson, especially because recently on the open market, you've been adding to your personal position. So for anyone that's not familiar with the story, Radisson is a gold exploration company. You raised a significant amount of capital last year, close to $13 million. You own the past producing O'Brien mine, which is located in Quebec, as well as the surrounding land around that. And we're going to get into all of that and what makes Radisson an interesting investment for investors today. So before we do, why don't we start with a quick overview? Tell us a little bit more about Radisson Mining.
Sure. So Radisson Mining is a gold exploration company. We're focused on advancing our 100% owned O'Brien gold project. This is among the highest grade undeveloped gold deposits in North America. We're located in one of the richest and most coveted mining camps on the planet, the Larder-Lake-Cadillac mining camp in the Abitibi region of Quebec. So this is one of the most prolific gold mining camps along the Cadillac Break, which is a structure that has hosted the majority of gold deposits in the world's largest greenstone belt. So we have a fairly significant land position along the Cadillac Break. We control more than 5 kilometers of strike length. That includes more than 2.5 kilometers to the east and 2.5 kilometers to the west of the past producing O'Brien mine, which was historically the richest mine by grade in Quebec. So the O'Brien project is host to an indicated resource of 289,000 ounces and an inferred resource of 145,000 ounces. So a total of 434,000 ounces in both categories. So that's based on the last update from July 2019. Since then, we've drilled 60,000 meters. We're funded for an additional 70,000 meters of drilling through 2021. And most of our defined resources are within a 1 kilometer strike length. We've got more than 5 times that strike to work with. In addition, most of what we have is within 500 meters of surface. And that's in a camp where mines typically go down to well over 1 kilometer in depth. So to give you an idea regarding the depth and scale potential in the camp, we're adjacent to Agnico Eagle's LaRonde mine. So this is a mine that has produced more than 6 million ounces since 1988. It's one of the deepest gold mines in operation today. So that should give you an idea regarding the scale potential in the camp and ultimately the upside at O'Brien. And to me, this represents a significant opportunity for Radisson shareholders.
Yeah, and you touched on a lot of those key points, which would be my follow-up question, which is what makes Radisson stand out from all of the many, exploration companies out there. And you touched on them, but why don't you just reiterate those key points that make you stand out comparative to your peers?
Sure. First of all, high grades. O'Brien has an indicated resource grade of 9.5 grams. So that makes it one of the highest grade undeveloped gold deposits in North America, particularly if you look at deposits not already owned by a producer. So second, I don't think you could find a better location to build a mine. We're right off the Trans-Canada Highway with access to just about everything you would need to support a low-cost mining operation down the line. 3, they say the best place to find gold is next to a gold mine, which is exactly what we're doing. We're exploring for gold right next to what was the highest grade mine in Quebec. And being a past producer, we're not starting from scratch. We have more than 75 years of historical production and exploration data to guide us. So to me, this is as good as it gets in the exploration business. And finally, I would say we're well positioned as a company with more than 15 million in the bank, strong support from key strategic and institutional holders, and an experienced team with skin in the game.
Yeah, and you touched on how location is very significant and a big contributing factor to Radisson, especially owning a past producing mine. Talk to us a little bit more about the location and what makes it so unique to Radisson.
So Quebec is a great jurisdiction for a mining company to be in. I would say we're located in one of the best camps in Quebec. So our project is right off the Trans-Canada Highway. It's only a 6.5-hour drive from Toronto and Montreal. So we have access to power, infrastructure, skilled labor, support services, pretty much everything needed to support a low-cost mining operation. And keep in mind, we're only a 45-minute drive from Val-d'Or and Rouyn-Noranda. These are cities built around the mining industry, so there is an attractive pool of skilled labor we can draw from. So people can drive into work, they can return home to their families at the end of the day. So this is not very common in the mining industry, but it's a major advantage when it comes to finding the right people. The other thing I would say, there are 7 mills within 70 kilometers of O'Brien. All of them, as far as I know, have excess capacity. So we may not even need to build a mill when the time comes to put this deposit into production. So with all these advantages, it's not surprising that we have several high-profile neighbors. Agnico's LaRonde mine is right next door to us. IAMGOLD, Wesdome, Yamana, Eldorado are all within 60 kilometers of O'Brien. And all this essentially tells you this is a great location to build a mine. Mm-hmm. It's exactly what you need to lower capital costs, to lower operating costs, and to accelerate timelines to production.
Yeah. So you mentioned how the O'Brien mine was a past producing mine, and it was producing from the 1920s to the 50s. Why did it go out of production?
So just to give you an idea, the old O'Brien mine is at the center of our claims along the Cadillac Break. And as I mentioned previously, this was historically the highest grade gold mine in Quebec. It was a consistent high grade producer for 20 years, 1926 to 1957. They produced 587,000 ounces at average grades of 15.25 grams, mined down to a depth of 1.1 kilometer. Before shutting down in 1957. So they shut down not because they ran out of gold, but the gold price at the time was $35 an ounce. And as you can imagine, it just wasn't economic to go any deeper. So after the mine shut down, there was no activity till the early 70s. For the next 30 years, there was some work done by a number of companies, including Darius Gold Mines and Breakwater Resources. Radisson acquired 100% of the O'Brien property in 1998. And over the years, the company continued to advance the project, but this was a different company till a few years ago with limited technical and financial means to advance the project. So as a consequence of that, the geology wasn't well understood until late 2018, and I would say early 2019. And that's when things started to fall in place.
Right. And you can see that, right? In 2018 and 2019, looking at your stock chart, the last 2 years have been some of the best performing years for Radisson. I think you more than tripled. You outperformed the gold price by more than 200%. So what was really driving that change? Was it just having better understanding of the area?
Yeah, I would say this is a story that came to life, you could say, in early 2019 when we took a fresh look at an old mine. The turning point for us was a new lithostructural model for O'Brien in Feb of 2019. And that suggested this was a conjugated system of cross-cutting veins, the highest grades and thicknesses occurring at the intersections of these veins. So that new interpretation led to a resource upgrade in July that year. It showed a significant increase in ounces at materially higher grades. Since then, we've drilled close to 60,000 meters. Results continue to expand the deposit along strike and at depth. And on the corporate front, we've been busy as well. We strengthened the team. We raised close to $30 million. We've attracted some high-profile investors, including Rob McEwen and David Garofalo's Marshall Precious Metals Fund, in addition to many other key institutions. The other thing we've done is we've continued to consolidate the land package. In August 2020, we completed a transformational deal, I would say, with Renforth Resources. So we acquired the adjacent New Alger property, and that essentially expanded our land position ninefold. So what we've done in the last 2 years was well received by the market. Mm-hmm. But to me, more importantly, it positions us really well going into 2021 with a larger land position, the right people, and the money that we need to unlock the upside that we see at O'Brien.
Yeah, and we'll get into that later of why investors should invest in Radisson today. What I want to talk a little bit right now is, you have 75 years of historical data, so I'm sure that really dictates smarter drilling and exploration theory. And if I understand correctly, you're basically trying to see if that same, with the O'Brien past producing mine, if that same thing can be repeated as a step out drilling form. So explain to us what you're seeing so far, and I'm assuming the funds generated from last year will be used to kind of validate that theory in greater extent. Is that correct?
Yes, that is correct. So most of the historical production from the O'Brien mine, that was just under 600,000 ounces as we spoke, came from a steeply dipping mineralized trend down to 1.1 kilometer. So what you have is essentially three veins accounting for 90% or more of historical production. So our models suggest that we have a system where these mineralized trends repeat every 300 meters or so as we step out from the old mine. So that's what the model shows, and you could say that's the thesis. So the way I see it, if we can validate that thesis, and if we can define at least three similar trends, the upside you're looking at, and I'm trying to simplify things here, is in the order of 600,000 ounces times 3, which is 1.8 million ounces within a 900 meter strike. So that's really what we were trying to confirm with our drill program. So we started with the first trend, 300 meters east of the old O'Brien mine. So this is where a lot of the historical work was focused on. Right. Then we stepped out another 300 meters east to test the second trend, then another 300 meters east and 900 meters east of the old mine to confirm the third trend. And drilling essentially has validated the model to date. We've established three trends within a 1 kilometer strike. And several high-grade intercepts have essentially traced mineralization at depth by up to 500 meters below the resource boundary. So that's close to double the depth extent of resources in each trend. In addition, drilling also appears to be expanding mineralization laterally in these trends to the east and the west. So I would say that the work that we've done has not only validated our model, exploration results continue to demonstrate that our resource will get a lot bigger. So the other thing to keep in mind is our work has essentially been focused on a 1 kilometer strike length to the east of the old O'Brien mine. That's only 20% of the total prospective strike we control on the Cadillac Break.
Okay, so there's a lot more to explore. And you focus mostly on the east. Are you expecting similar things to occur on the west?
Yes, for the most part. The west hasn't really been tested so far. Keep in mind, the majority of our work so far has been focused to the east.
Yeah.
But what we did last year with the New Alger acquisition is we've expanded our land position, and that opens up the potential immediately to the west of the old O'Brien mine.
Gotcha.
The geology is the same, the structural setting is the same, it just needs to be tested.
Okay, so that's a good lead into what 2021 has in store for Radisson. So let's talk about what investors can expect from Radisson for this year.
So I think 2021 is setting up to be an even more eventful year for the O'Brien project and in turn for Radisson as a company. And what we've done in the last 6 months of 2020 has positioned us very well. Like I said, our land position has been increased ninefold, and that essentially means we have many more targets to drill. In addition, we closed our most successful financing in November last year, so we're in a very strong position with more than 15 million in the bank. So in terms of drilling, we've
15. Yeah, okay.
15. So in terms of drilling, we've done close to 60,000 meters of drilling so far, and we plan to drill another 70,000 meters of drilling. Keep in mind there's a backlog of pending assays at the lab, so we've only been able to release approximately 45,000 meters. So what you've seen in terms of drill results represents only a third of the total 130,000 meters we plan to drill, which essentially means that in terms of news flow, you should be looking forward to twice the volume of drill results. Now, COVID-19 could slow things down a little bit, but even then, from what I see, 2021 is setting up to be a bigger year for Radisson than 2020.
Okay, that's exciting. And I know that you believe in that strongly because you've been increasing your position personally on the open market, buying at these price points. So that leads in very nicely into why investors should be buying Radisson today. And I think that speaks to your confidence in the project. But, talk to investors about why you believe that they should invest today.
I think Radisson offers a very attractive value proposition. To me, that is a combination of high grades, great location, and in the vicinity of one of the richest gold mines in Quebec. So yes, the stock has done well in the last 2 years, but from what I see, I think we're only getting started at O'Brien. So like I said, the majority of what we've defined so far in terms of resources are within a 1 kilometer strike, and we've got 5 times that to work with. So what we've defined is within a depth, for the most part, of 500 meters. And like I said, this is a camp where mines typically extend to well over 1 kilometer in depth.
Yeah.
To me, that means there is a lot more upside to be unlocked. And the other thing to keep in mind is insiders own 14%. So we've got skin in the game. We've participated in every financing. We continue to be buyers in the open market, and it shows you how much we believe in the story. So I've continued to add to my position as well, slowly and gradually. My last 2 purchases in the open market were at 33 cents and 35 cents. And the last I checked, the stock was at 31 cents. So you can buy at 10% below where I last added to my position. To me, that is a very attractive buying opportunity, and heading into what I believe will be a great year for Radisson.
All right, Rahul. Well, I think that's a perfect place to leave things off for investors. I know you've definitely piqued my interest. Again, thank you so much for joining us. For everyone that was tuning in, that was Radisson Mining Resources. We were joined by Rahul Paul, the president of Radisson Mining. Radisson is listed on the Toronto Stock Exchange on the Venture under the ticker symbol RDS, as well as on the OTC exchange. Rahul, thanks again for joining us.
Thanks, Veronika.